Life has a way of throwing curveballs when we least expect it. And let's face it, bad things can happen even when we're not prepared. That's why it's crucial to be proactive and ready for the unexpected. Today, let's talk about a topic that can provide a safety net during challenging times: critical illness insurance. Critical illness can turn your life upside down, both emotionally and financially. Nobody is immune to the risks of a serious illness, no matter how healthy your lifestyle may be. Living in Canada, some of us may think that our public health system covers everything, but the truth is, it's quite different. So what exactly is critical illness insurance? Well, it's a policy that provides you with a tax-free lump sum if you're diagnosed with an illness or a covered condition. You have the flexibility to use these funds however you see fit, whether for healthcare treatments, household expenses, transportation, or replenishing your savings. But why do we need it in Canada? While we're fortunate to have a public healthcare system, that healthcare can still be costly. The financial impact of a sudden illness can be devastating for individuals and families. A recent study showed that the average cancer patient in Canada, for example, spends around $250 a month out of pocket just on caregiver expenses, travel costs, and medication. Costs can be even higher if you're living in a remote area. Apart from the financial aspect, a critical illness can directly impact your employment. While most companies provide sick leave or a temporary leave, it may not be enough if your health requires a significant long-term change. You may have to stop working altogether or at very least reduce hours. Now, you might wonder, is critical illness insurance really necessary? Well, it's a personal choice, but there are some important things to consider. Some people think that they don't need critical illness insurance because they're healthy. And while it's great to be healthy, the reality is that almost half of Canadians would develop some sort of cancer at some point in their lifetime. Serious illness can affect 1 in 3 Canadians. Others delay coverage thinking that they can just do it later. However, as time passes, the chances of being approved for this kind of coverage actually decrease. On top of that, if somebody in your family is diagnosed with a condition, it could affect your ability to get covered, even if it's not you that was diagnosed. You might also think of just withdrawing the funds from your RSP or your investments if you get sick. But that comes with downsides and jeopardizes your retirement savings. Serious illness can last for an extended period, and relying on short-term solutions like that can create some longer-term problems. So let's talk about what illnesses are covered. Critical illness covers a wide range of serious illness, most importantly cancer, stroke, and heart attack. However, we'll review the policy carefully and make sure that you get all your questions answered once you've dove into which policy you'll take. And then let's talk about needs. Determining the right amount of coverage depends on several factors, such as your retirement timeline, monthly expenses, savings, and your family situation. So, is critical illness insurance worth it in Canada? Absolutely. Our public healthcare system has limitations, and preserving your other investments is important to ensure that you can enjoy retirement without that financial strain. Plus, critical illness insurance is much easier to get before a health condition arises. Book a call with us today and learn more about critical illness insurance and insure protection for your family.